Good afternoon. Thank you for joining. This is Michelle Savage with XBRL-US, and you're here for our webinar on artificial intelligence, machine learning, and structured data. We're very happy to have with us today Rachel Carpenter. Rachel is founder and CEO of Intrinio. We also have Victoria, or Tori Kim, Director of Partnerships and Strategic Growth at eBrevia, a DFIN company. We also have John Trizolino, Director of Business Development at Donnelley Financial Solutions, and Matt Von Lintel. Matt is Chief Technology Officer at Intrinio. So we've got some really great experts with us today, and we're going to be talking through a number of different topics. We're going to start off talking a little bit about just an introduction to artificial intelligence. What is it? How's it used? We'll talk about the evolution of data, some legislative and regulatory activities that are ongoing that will impact the availability of different types of structured data that'll make it even easier to use artificial intelligence platforms. We're going to cover some use cases. We'll look at a legal use case, how the legal community is embracing AI, and then also talk about data normalization, which can be used by many different types of companies, including the investment community, audit firms, public companies as well. Lots of different organizations can leverage normalized data. We're also offering CPE credit today. So if you opted to receive CPE, or even if you didn't, frankly, just respond to the poll questions that will come up at 2 points during the session today. And as when we get those answers, we'll be able to confirm that you can get CPE credit and send you your certificate. Also, as we go through the presentation, we will have a discussion point at the end. And so if you have questions, please just key them into the Q&A link that you see on your screen. It's just a little Q&A button, and send those questions in, and we'll be able to queue those up for the discussion at the end. So with that, I'm going to start our presentation, and I'm going to turn it over to Matt, who's going to give us an introduction to AI. Matt?
Hi, welcome everyone. Thanks for joining. So I think, Michelle, we can probably go to the next slide and just dive right into talking about machine learning and artificial intelligence. I think just at a high level, machine learning, artificial intelligence, it sounds like, big, very, intellectual concepts, but at the very basic level, right, they're just systems that allow us to learn and to adapt without explicit instruction, right? They're programs that use statistical models to learn patterns, that apply from big data sets. Oftentimes they're patterns, that are too many variables, too big of data, so that way, you need very advanced, statistical models in order to derive the patterns from that and make actionable decisions. Machine learning, typically I feel like is more of a basic level of AI. We'll talk about AI a little bit more in the next slide. But as far as, the typical use cases in finance, algorithmic trading models are a very common one that we see. Investors, day traders, minute traders tend to want to get the most, make the trades as quick as possible, and with the proper algorithms, that definitely helps a ton in order to make decisions super fast in a very complex space, like trading stocks or options, for example. Even you're seeing more and more of sentiment analysis for trading based on, say, Twitter or Reddit or some of these other things, where trying to determine, the general consensus of just people's opinion of whether a stock is going to go up and down, not just the technical metrics. Risk management, kind of the same thing, but just for a different thing. Insurance companies or banks, are always trying to evaluate risk and try to determine, how much, say, an insurance policy should cost, or how much how much of a loan or how much of an interest rate or how risky this person is, right? So that's always there. Document analysis, as far as either classification, extraction of data, It goes on and on. Basically, the more structured the data, the easier it is for machine learning to kind of pull that out. Even handwriting analysis, these sort of things, you're seeing basically, anything and everything that, machine learning engineers can think of as developing models for to try to process the stuff. And fraud detection, I love it. When my insurance, or I mean not my insurance, but my credit card company will call me up and say like, hey, we saw some unusual activity on your credit card, right? Maybe I'm traveling, maybe I'm made, several transactions in a row at a food truck or something, because my kids were way hungrier than I thought they were, or something like that, right? So that unusual activity is pretty common use case, and yeah, financials use that sort of stuff all the time. So, like I said, the list goes on and on and on. Artificial intelligence is sort of the next level of this. I think, in my opinion, everybody has different, I think, levels of what is AI or what is not AI, or does it even exist. I think some people think of like scary, Skynet, or even some Google engineers interacting with one of their chatbots recently felt like the AI was sentient. Is it sentient? No, right? But in my opinion, and I would love for you guys' comments on this, is AI is kind of twofold. One is the attempt to make machine learning models that are able to do human-like things, like drive cars, that sort of thing. In addition to that, it's also the ability for these computer systems to learn sort of on their own. The loss function, if you will, is built in, right? And so it doesn't necessarily need that explicit training by a human in order for it to learn. It can train itself, right? And I think when you get into those systems, that's when AI becomes extremely powerful, right? And the future is super promising. As you guys probably already know, AI needs a ton of data. The more data, the better, because it's using that data to train itself and to refine itself. And so the more edge cases, right, especially the more nominal, or abnormal edge cases, are the ones that are probably even more important for it to learn on. And of course, you're going to need, with these huge data sets, you're going to need powerful algorithms to parse through this, to clean the data, and tons of GPUs and CPUs to process all of this. GPUs tend to be better for a lot of the AI machine learning models, just because of the way the statistical math and algorithms are structured. GPUs tend to be better for that. Similarly with AI, as far as financial services, it's just taking kind of like those machine learning models to the next level. And you can get even, better automation, better efficiency, process more and more bigger data sets with even more and more variables, and find even those better edge cases, or those better instances where maybe you want to make an investment, or maybe you realize, oh, this is a fraudulent filing, or a fraudulent activity, or anything of that nature.
Thanks, Matt. So this is Rachel, CEO of Internio. We're going to switch gears for just a minute. If we can go to the XBRL slide next. Yes, thank you. And we're going to talk about structured data. So what we're here to talk about today is everything Matt just covered. What is machine learning? What is artificial intelligence? And what happens when we're able to apply those concepts to structured data. So to give you a quick background on structured data, I'm sure many of you on the call are already familiar or fans of XBRL, which is a very niche part of the financial and data world, but a very important one. I'll give you a quick background on this. So XBRL is a freely available and global framework for exchanging business information. A much simpler way to say that is that it's just a programming language, really. It's an XML-based syntax. At the very basic level, we're essentially taking financial information and coding it instead of like having it in a PDF form. And this is extremely critical, right? We basically have moved from this world, through the use of XBRL, where critical business information and intelligence was on paper, basically, right? Like a PDF. By instead taking that information and filing it and formatting it in the XBRL format, we make that information machine readable, standardized, and structured. Very, very, very critical components of what we're going to talk about today. So we've made huge moves away from the basic PDF and into this world where we're actually structuring our intelligence and data in a way where machines can read it much, much easier. So what does this mean at the highest level, right? We're now moving off of paper into XBRL. More and more data sets are being filed this way. It really is democratizing access to this information. I'm not sure I know very many investors that can afford to hire teams of people overseas to scrape data off of PDFs, right? It's not efficient, it's not affordable, and it's not accessible to really get access to all of that data. But through XBRL, it suddenly becomes a lot easier to get access to data. Increased speed, increased quality of data, availability of key data points. In essence, if you keep following this down the path of outcomes, you realize that by making this information more affordable, we're actually lowering the cost of capital, right? Which is huge for our markets. So we're making data more accessible through the use of XBRL. And the types of data that are filed this way right now, probably the most popular set of data that's filed in XBRL is US fundamental data. In 2009, Congress mandated that all publicly traded companies have to file their financial statements in XBRL. So we've got data going back to about 2007. Asian countries have actually been filing this way even longer than us. Europe made this mandated for public company filings in the last year. Various countries in South America are filing this way. So it really is becoming an international standard for how we communicate business information, which is great. There's even some pilot programs going on to have municipal financials filed this way. But that's really just the tip of the iceberg. The more data that can be filed in this structured global framework, the better. And so we're making a lot of good progress on that. And XBRL and this type of structured data is what we're here to talk about today, because when you start applying machine learning and AI together with XBRL, things start to get really interesting. So I'll pass it over back to Matt to continue on.
Cool. Yeah, thanks, Rachel. So, as a financial data company, XBRL is really awesome, right? And instead of trying to parse these PDFs, instead of having manual input, having accurate data is super critical. Anytime you're trying to do analysis on it, whether it's traditional algorithmic or machine learning or AI, right? And I'm sure everyone's heard garbage in, garbage out. So, the more structured and uniform the data is, the more you can make better and accurate decisions on it and be more confident in what you're trying to do with machine learning models or anything in order to process this data and build derivative data sets, which is what we do at Intrinio. So if not only does XBRL, because of the way it's structured, it just is like a foundation that sets the stage for analysis that you couldn't really do with financial data or otherwise. So with the two combined, you can really do a lot of as it says here, high quality and powerful innovation. Okay. All right. So as far as specific XBRL applications, as far as financial data goes, building algorithmic trading models based on historical fundamental data is what a lot of our clients do. Based on things like whether it's simple analysis like earnings per share or price to tangible book or anything like that. Creating the data that allows the investors to give insight into trends, right, and make predictions is really what they're trying to do. And like I said before, XBRL sets the standard for all that to happen. As far as, another use case is like insider transactions, where insider owners, whether it's like a member of a board or a CEO or somebody like that, they have to report when they buy or sell shares to the SEC, right? So again, taking this data, standardizing it, giving it to investors allows them to train models and make predictions on future stock prices. Same with institutional holdings, in a big institution, whether that's a hedge fund or a conglomerate like a Berkshire Hathaway or something like that, based on their holdings, which they also have to file with the SEC, can give you insight into market trends and at least perception of what big players in the big investors are thinking as far as what companies to invest in or not. And in addition to that, just alerts, right, I think is a huge thing, right? Anything that's deviating from the norm as far as like financing, could be a signal to buy or to sell or to look closer, right? And so I think the major changes are huge aspects of this, as far as like, is this bank even going to be solvent, right? Is it going to go bankrupt, or should I invest in it? So.
Great. Well, thanks, Matt and Rachel, for that intro and background on AI and structured data. This is Tori Kim from eBrevia, and I'm going to be spending just a few minutes talking specifically about the legal sector and the way that AI technology is currently being leveraged in that industry to make more efficient and improve the work that lawyers and other folks doing legal review are doing. I'd say we've seen quite an upshot in terms of the adoption of AI technology in legal over the past decade. And this is for applications that quite honestly span across many different areas of law and types of law. So for instance, in the litigation space, there are a number of solutions that are targeted specifically at the discovery process, which often involves, the exchange of information and exchange of evidence between parties to a case that will ultimately be presented in court. And in that area, AI is assisting reviewers with various tasks, including what's called conceptual searching or clustering to help find relevant documents more quickly than would be done in a manual process. Other tasks as well, including, the deduplication of files, which is really kind of lifting and alleviating that burden on reviewers in terms of kind of the volume of documents that they're sifting through. We've also seen quite a swift rise in adoption of AI on the transactional side of law as well. So there we've got reviewers who are using machine learning to speed up the review of contracts. So rather than having an individual human reviewer sit for hours poring over a long, complex legal document to try to identify and analyze some of the key areas in there for analysis, AI tools are stepping in and are able to perform a robust first pass or first look at those contracts, pull out all of the relevant data or provisions that the reviewer might need to take a look at in those contracts. And it does so very quickly, and then allows that reviewer to really complete that review in an expedited way, more efficiently, more accurately, and then be able to turn their attention to the next task or the next document that's in their stack in a much shorter time frame. And then quickly, as a last point on this slide here, I also wanted to touch on the fact that AI has a presence in the document redaction space as well. So one quite onerous task that lawyers often face is having to manually go through document by document and redact out personally identifiable information or other confidential or sensitive information from documents for data privacy purposes. And as you can imagine, this is very time consuming. If you're thinking about someone kind of going document by document to engage in this process. And it's definitely something that folks and companies are relying on AI a lot more to be able to automate. And then Michelle, can we move to the next slide? Thanks. I also thought I would just spend a couple of minutes here talking about the value proposition for AI as well, specifically with respect to legal, but I think, these points cover, the benefits of AI generally. So the big one that we hear about all the time in the legal world, but I think, like I said, is also applicable generally, is really efficiency. So what AI is offering legal reviewers is really that reprieve from the otherwise tedious and manual tasks that we just talked about on the earlier slide. AI is able to come in, it will parse through in a short time frame the information that's being presented and help that reviewer to get a lot more quickly to that meat and potatoes of that legal analysis that is required for them to kind of get that project done and then turn around and focus on some higher value work. Because AI is reducing the time and resources that are needed for any given review, it's also offering cost savings. So if you think about a corporate legal department, perhaps that's dealing with, let's say, a large M&A transaction, and they don't have the capacity or the resources in-house to handle the full scope of due diligence that is required for that transaction. Oftentimes, they're needing to outsource that due diligence to an external law firm to get the deal done. Being able to implement an AI tool can reduce the spend that's required to complete that work in terms of the spend of legal fees, because the company can now take some of that work back in, shoulder a lot more of that due diligence in-house, rather than having to kind of seek assistance elsewhere at a higher cost. From a law firm perspective as well, let's say a firm is operating on a fixed fee, being able to reduce the time and resources that are required internally to complete that transaction or that set of due diligence is going to be advantageous from a cost perspective too, because suddenly there will be more resources, more bodies, more brains to be able to pursue simultaneously and complete business elsewhere and assist other clients. And then the last piece on here is with respect to the accuracy gains that AI can bring. So if you think about AI as being a second set of eyes on the information presented, whether that be a contract or another piece of documentation, it's essentially providing a double check for the work that the human reviewer is doing. And especially when we're thinking about these high volume, high manual effort tasks like your discovery or like due diligence, the chances are that human reviewer is stretched pretty thin and is inevitably prone to some error. So having the AI there as kind of a second reviewer, providing a pass through the documents, you're often seeing the AI pick up on areas that the human may have missed, may have glazed over, and really providing a backstop for that review as well. So ultimately, these are kind of the major three value adds that we talk about all the time and hear from clients and others with respect to AI for legal. But like I said, I think these are applicable across the board when we're talking about AI and machine learning.
Thanks very much, Tori and Rachel and Matt. We're going to move on to talking a little bit about the background of data and how it's evolved over the years and what we might be seeing ahead. So we're going to turn this over to John Trizolino now.
Thank you, Michelle, Rachel, Tori, Matt. Great to be here. Moving along, this slide here really brings together the context for me. It's kind of like the Holy Grail. I'm John Trizolino, the Director of Business Development for DFIN, Donnelley Financial Solutions, and we provide innovative software and technology solutions for tech-enabled regulatory and compliance solutions on a global scale. For too long, our compliance documents have remained document-bound, and this has created really big challenges for artificial intelligence and machine learning, as discussed by Rachel and Matt, in pulling in this information in an unstructured format. The government moves forward with this reporting, however, using this format as if these documents are being read. And we know that the SEC points out that over 85% of the activity on the EDGAR website is not from people coming to read the site, it's from machines pulling the information down. So it's time that we focus on the movement of data into a standard format using XBRL or embracing the structured format. And in that process, creating a way that allows us to elevate the quality and the usefulness of the data. These are important aspects because simply putting data into an XBRL structure doesn't necessarily mean you have high quality data. In fact, I've worked very closely with Michelle and the DQC over the course of the last several years to elevate the quality and consistency checks in the SEC submission to make sure that the data is more complete, consistent, accurate, and correct. And when we move along that streamline of focusing on data quality, we can begin to focus on not just the compliance of the regulated entity, but really building on business intelligence and creating a model that allows us to utilize this data that we're moving from a document-bound solution into a data set following data standards, interoperability, and audited information, creating real business intelligence. Let's go to the next slide and we'll talk about the transition here also in the economic value and semantic use of data as it moves along the threshold from unstructured data to standardized interoperable data. And so what we're looking at here really is the movement of data from unstructured formats into an XBRL standard, and using the XBRL standard and embracing the elements of that standard, like XBRL formula link bases, to elevate the consistency, quality, and effectiveness of the data that's being collected. When we look at the XBRL standard today deployed in US GAAP and IFRS, we don't take advantage of the XBRL formula link base. An XBRL formula link base will allow you to apply business rules and context to the information in a way that really helps provide more intelligence for the end user, which would be the artificial intelligence and machine learning programs that are pulling in these data sets. Inline XBRL has evolved to allow us to streamline the human readable version and the machine readable version, and applying the accounting semantics to this process really brings business intelligence into that process. So as a preparer, I'm no longer going through the exercise of reporting following an outdated document-based program. I'm developing a use case that allows me to create economic value for us in this process. And for those of you on the call, I'd really like to help bring you to the table and help you move this needle in a way that allows you to provide comments in the process. So DFIN provided a model on a FERC reporting back in 2015, where we developed a FERC reporting model with the Washington State Utilities Transportation Commission that allowed them to move from a document-based platform to an XBRL data set, validating the information against consistency checks and allowing them to move directly into data analysis. That streamlined the process for Washington State. At the same time, FERC was moving toward an XML-based model away from the old Fox Pro system. Our use case really changed the FERC and helped them adopt XBRL. And today, applications like HData are taking in FERC reporting using structured data and immediately putting together high quality data analysis for the markets. And so as we move to the next slide, I want to bring your attention to where we need you to step to the table and help us. And there is a movement for the markets to adopt and address the risk and value of sustainability data. And we want them to follow standardized, interoperable, and audited practices. The IFRS Foundation has a program out place right now where it closes tomorrow, but it's a draft taxonomy for their IFRS Sustainability Disclosure Taxonomy. The IFRS S1 draft taxonomy addresses the general requirements for disclosure on sustainability. That follows the Task Force for Climate-Related Financial Disclosure. There are 4 tenets there. It's governance, strategy, risk management, and metrics and targets. The IFRS S2 taxonomy is focused on climate-related disclosures, and that closely follows the SASB framework, which was developed across 77 industries and has the taxonomy in place. We are participating in the commenting process of taking these taxonomies and putting them into practice and commenting back to the regulatory agencies, because the IFRS is working in concert with the EFRAC European Union on their initiative, and the SEC is participating too. The goal here is to create a common set of XBRL of standards that will have an XBRL component to deliver a high set of data quality for the markets to use with both financial and non-financial or sustainability information. And this is where Rachel and Matt and Tori will begin to benefit from the use cases where we're now looking at financial data, but very soon we'll be looking at structured sustainability data and then taking these two data systems and bringing them together to drive a very rich data profile moving forward. And this is happening in the EU. The EU Financial Reporting Advisory Group, EFRAC, is responsible for drafting the standards for the CSRD, which is the Sustainable Reporting Directive. What this will do over time will bring the same type of rigorous reporting in place on financial reporting with structured audited data to sustainability data. They're creating a database that allows financial data and sustainability data in standardized, interoperable, and audited formats available for what Rachel described, democratized data consumption. These are critical elements as we design AI and other tools like RegTech and SubTech to get that information. For those of you that want to dig into that model, DFIN wrote a paper on RegTech, SubTech, and AI. It's on our website. You can find that paper for your consumption at a later date, but I won't go into that on this webcast. And then finally, Michelle, if we can go at the bottom of this page, you're looking at the SEC's movement to standardize the climate reporting. And this is something that's happening right now. The SEC will deliver a taxonomy for the climate-related reporting initiative. It will require people from all domains, from preparers, from users, from interoperable standard setters, as well as those in ML and AI, to come to the table and help identify what about that taxonomy we need to look at and develop and bring into practice before it becomes a part of the SEC's rule. And then finally, Michelle, I'm closing with what's going on at the US government. And here we can start to see that the Grant Reporting and Efficiency Agreements Transparency Act of 2019 created the role for the Chief Data Officer. So now we have somebody at all government agencies who's in charge of an oversight to the accountability and the usability of data across these organizations. The Artificial Intelligence Act of 2020 elevated the use of AI in the federal government, and the Budget Justification Act of 2021 also builds on the fact that information should be used in evidence and policy-based reporting. And finally, we will start to see the iteration of the Financial Transparency Act and the Financial Data Transparency Act, which the Financial Transparency Act was approved by Congress in October of 2021 by a margin of 400 to 19. So it's as bipartisan support. It's very well received. It's likely we'll see this Financial Transparency Act come to fruition by the end of this year. And in doing so, what we'll see is all agencies under the FSOC required to provide electronically searchable information designed to support RegTech and artificial intelligence and build on the comprehensive program of standard business reporting, ultimately designed to harmonize and reduce the private sector's reporting compliance burden while enhancing the transparency and the accountability of that process. And so these are the cornerstones that we are challenged to help elevate and bring to market. Then it creates the foundation for AI and artificial intelligence and machine learning to really deliver on the promise of giving high quality, scalable information to the markets. Michelle, I'm going to transition back to you for the rest of the presentation.
John, that was great. Thanks so much. We're actually going to take some CPE questions right now. So for those of you who are getting CPE, please take a look at the screen here, and we're going to run through two questions real quick here. Okay, so the first question, which description below is the best fit for artificial intelligence? Is it the development of systems that learn and adapt without explicit instruction? Is it the simulation of human intelligence in machines? Or is it the leveraging of algorithms and statistical models against big sets of data? So this was a little tricky, and you just have to think of like, what's the difference between something like artificial intelligence versus machine learning? So we'll just take like another 15 seconds or so for this one. All right, we're going to close down this poll, and the answer is the simulation of human intelligence in machines. All right, let's move to our next question, which relates to legislative efforts. What is the Financial Data Transparency Act designed to do? Is it to require grantees to report to federal agencies in standardized data format? Is it to require federal financial regulatory agencies to adopt standards for their reporting entities? Or is it to launch a national AI initiative? Which is the best fit for the Financial Data Transparency Act? And just as a reminder, while we're finishing up this poll question, if you do have questions for our speakers, please post them in the Q&A link, and we'll be sure to get to those after we cover the use cases, which is going to be our next topic.
Michelle,
so
I just wanted to, sorry, jump in there quickly. I mentioned a paper available on our website. It's a paper that we put out. It's called A New Approach to Data Quality, Preparing for RegTech, SubTech, and AI Future. And it really dives into the need for us to focus on, building high quality data files for the consumption of AI and ML, and help the RegTech and SubTech markets deliver on those promises. I'm going to drop it in a message to you. If we can share it with the group.
Great. Why don't we send that out? We typically send out a message to attendees a day or two after when the replay is available, so we can send that out to John. Okay, so I'm going to end the poll now. Thanks to all for answering. The correct question was the second one: require federal financial regulatory agencies to adopt standards for their reporting entities. Okay, so now we're going to go back to our presentation. And we're going to start with a use case for the legal community. So for this, I'm going to turn back to Tori Kim. And Tori, if you could just take it away here, I'll flip to your first slide.
Sure. Thanks so much, Michelle. So as Michelle mentioned, we're going to shift gears a little bit and spend some time focused specifically on a legal use case. And I'm going to be speaking about eBrevia, which is DFIN's contract analytics tool. So if we're thinking about that broad overview of AI and legal that we talked about earlier in the presentation, this is going to fall into that transactional contract review bucket. So I thought we'd start this section by just talking about a little bit about what it looks like to actually perform a contract or document review using AI. So rather than having in the traditional process, a reviewer kind of manually read through a contract and perform the review that way, when you're using an AI tool like eBrevia, the reviewer will start by uploading the document or corpus of documents that they need to review into the system. And at that point, the AI will actually go through those documents, parse through them for every single legal provision or clause that it's been taught to find. And these provisions can range from, your key dates in the document, your parties to the agreement, all the way to the more complex legal concepts within those contracts, like a change of control clause, an indemnification clause, et cetera. Once that data has been identified and extracted by the AI, then it will be presented to the user in a nice and neat summary that's going to cover all of the different salient or key areas of that contract that the reviewer was interested in taking a look at. And at that point, the abstract can be reviewed, edited, tweaked by that reviewer. It can be exported into an external report. So if you wanted, a Word or an Excel report that summarized all of that information, that's shareable or editable in that format. You can take the data that the system has pulled out and push it into another system or another database. And you can also track and search and filter through that data internally within the eBrevia UI if you wanted to continue your analysis from within the tool itself. Can we hop to the next slide? Great. So we're seeing this utilized really across the board in terms of use cases under the umbrella of contract review. And one great thing about eBrevia is that it is document agnostic. So it's quite flexible in terms of application, as well as, the types of documents that it's able to actually parse through and analyze. The company's roots are in M&A. So due diligence was really kind of the use case for which eBrevia was originally created. But since we've been in the industry for over a decade now, the applications have really expanded well beyond due diligence into a number of different areas and different types of contract review, whether that be your general management of a company's contracts, assisting with various compliance or regulatory type projects like your LIBOR remediation or GDPR repapering, assisting folks with the review of leases in the context of like a lease audit or to kind of align with certain tax requirements that might be in place. Another use case might be tracking data from loan and credit agreements, and the list goes on. And many of these use cases are addressed by eBrevia out of the box already. So if you were to log into the system today, you could load in your documents and have it kind of extract out all of those key data points that you're looking for. But one cool thing about eBrevia's AI as well is that it's built to actually be taught by users as well. So a non-technical user, so a lawyer, a business person, a paralegal can come in and actually, as a non-technical person, train the AI to learn new concepts or new legal provisions based off of their own documents. So there's a lot of flexibility there in terms of use cases. You can kind of rely on what's out of the box, but you also have the opportunity to actually engage with the AI yourself and customize it and tailor it to your exact needs. Before we dive into an actual walkthrough, I've got some screenshots of the system. I wanted to spend just a little bit of time digging into exactly how eBrevia's AI learns and chat a bit about standardization. So when eBrevia's AI is taught to identify a new legal term or clause, it's given examples of what that clause looks like in the context of documents that are similar to those that the user ultimately wants to review. So, for example, if I wanted to train the AI to pull a specific piece of language out of an employment agreement, I would want to train it using a variety of employment agreements and language therein. But if I wanted to train the system to pull out language, let's say across the board from multiple different types of contracts, then I would need to train the system using a variety of agreements and not just one type of agreement to kind of ensure the system has an understanding of kind of the variation across those document types. When I think about the way that the AI learns, I like to think about it similar to the way that you would teach a baby something new. So if you wanted to teach a baby what a dog is, for instance, you would want to show that baby examples of various dogs. But you would also want to show the baby examples of things that aren't dogs. So maybe you would introduce it to other creatures. This is what a cat looks like. A cat is not a dog. It's the exact same thing with AI. So we give the system examples of the legal clause itself that's being taught. Those would be your examples of dogs. These are what we call positive examples. But the system is also going to learn from all of the other text in the document that doesn't constitute a specific example of that clause. And this is what you would call a negative example. These would be your cats, your squirrels, your rabbits, etc. The AI then takes all of these examples, positive and negative, to inform and understand specifically what it should be looking for the next time you as a user load a new contract into the system and then ask it to pull out that term that you're looking for. And standardization plays into this because it can really impact the time that it takes to train the AI to learn, as well as how the AI performs in terms of pulling that information. So the more standardized the contracts are, for instance, if there is a consistent structure to the documents, the same sections appear in the same location within those files. The language that's used to express a particular clause doesn't vary across the documents. The easier it will be for the AI to then automate that process and do a good job of it. On the other hand, if you're dealing with contracts that aren't really based off of a consistent template or form, and let's say that legal term that you're looking to teach it is expressed very differently with different language across those contracts, that is inevitably going to require more examples to account for all of the potential variation that the AI might encounter when it's trying to pick up that language in other contracts. And therefore, it's going to require more training to get the AI up to a level of accuracy that satisfies, your level of need for that review. Given the fact that contracts are not consistent across the board, companies will be dealing with, contracts that look vastly different from each other. eBrevia is built to handle both situations. So you can, feed in a bunch of contracts that are on a standard form. You can also feed in contracts that look entirely different from each other, and the system will still pull out that information. But I think it's important that when we're thinking about AI to understand that standardization really does lay a strong foundation for automation. And it does have the capacity to not only expedite, but also enhance the way that the AI is performing, regardless of what the task might be, whether it's reviewing legal contracts, which are typically in a more unstructured format in text, or if you're parsing through financial data, which is in a more structured format. So now I'm going to just spend a few minutes hopping through a couple of different slides that cover the eBrevia system and show you what some of this looks like in action. So this first slide here is what we call the analysis view in our system. This is an example of what it would look like if you took a contract, loaded it into eBrevia, and it had been kind of fully processed and parsed by the system. This is the view that you'd be able to see for that contract. So you would have a view-only copy of that document on your left-hand side. And then on the right-hand side, you would have a summary of the data points that you care about. And in this case, let's say I was interested in doing a LIBOR-oriented review of this document. Rather than me having to go through and read the document top to bottom or flip through all the pages to try to find the relevant language, the system is doing that work for me. So it's automatically pulling out the relevant clauses, inserting them in the proper section there. And it's really allowing me to get through that review a lot more quickly, see language in context, do a double check to confirm that everything is as it should be. And then I'm able to move on to the next section or the next document in my, my set that I have to review. The next slide here is kind of touching on that process of actually training the system. So when we talked about presenting the system with examples of what a clause looks like in the context of your document, this is an example of that. So if I wanted to train the system to be able to pick up the defined term covered entity throughout my documents, I would need to present it with examples of what a covered entity definition looks like. And in eBrevia, that just basically means I would highlight that language in the document and add it to my covered entity section that I've created. Very much built for your non-technical users. It's intended for folks who are subject matter experts, but are not engineers or data scientists, to be able to engage with the AI and train it through examples. And then once enough examples have been accumulated, you're able to then run those machine learning models and have the AI start to automate the process. Next time you load a contract, it will start searching through that contract for that defined term and pull it out for you, rather than you even having to run a Control F search on that document or scroll through it. Quickly here with the next few slides. So this one touches on another feature that we have on the system, which kind of builds upon that core extraction functionality that the AI provides. So in this example, eBrevia is pulling out a renewal clause from my document. But what I'm able to do on top of that is actually ask the AI to answer structured questions about the data that it's pulling out. So in this case, I might ask, is there auto renewal language in that provision? And And the system can actually be taught to search through that renewal clause and then flag whether or not there is auto renewal language in there. So it's kind of an additional layer of automation on top of that kind of core extraction. Like I said, it can take the form of a yes, no question. It can also take a structured form of, a drop down or a multi-select type question. So lots of flexibility there to not only pull out the data, but also do some analysis or kind of get to the heart or the core of those key questions that you have about the information in your documents. Very quickly on this slide here, just touching on the fact that we do have the ability to extract more structured data from your documents as well. So you can teach the system to automate the extraction of tabular data if there are specific charts, tables in your documents that you'd like to include in those summaries. Save yourself some time from having to plug all of that in manually. This is a great tool for that. And then we can move to the next one very, very quickly here. This is an example of what an export would look like in the system. So taking that data from within eBrevia once it's been collected and being able to push it out into a report, something that would take a human reviewer significant amount of time to put together. This is something that eBrevia could put together using its AI in a matter of seconds by collecting that information and then pushing it into a report. And then last slide just covers our dashboard, which is giving you a high-level overview of what's going on for a given matter or transaction. You're able to kind of track a lot of that key data up here and do some of your analysis from this perspective too. So hopefully that gives kind of a good sense of how AI is being used for a particular legal use case. And I will pass the baton back to Rachel and Matt.
Great, Tori, thank you. So we're going to move on to data normalization. And Rachel, I think we'll turn it over to you to start.
Yeah, thank you. So we're going to shift gears a little bit and talk about a use case for AI and XBRL when it comes to financial data feeds. So quick background on our company and our use case. Intrinio is a financial data platform. You can think of us as like the Stripe of the financial data industry, getting access to critical data feeds like equities, options, ESG, ETFs, financial statement data, streaming stock prices, all of these different data sets that are very critical in the capital market space for investors and developers. It's really hard to get access to that data. A lot of large traditional institutions charge a lot of money for it. So we've innovated under the hood to automate a lot of the processes of storing and cleaning and distributing financial data sets. So we sell data in really easy to use packages, equities, options, ESG, ETF. You can come to our website, get API keys, and start pulling down data in a matter of minutes. So we've really streamlined the process. The fun part about what we do at Intrinio is that our clients at the end of the day end up building on top of the data. So we don't have any dashboards or terminals per se. We're very API and very developer driven. And so the fun part is that our clients take the data and build really cool innovations on top of it. So our data is getting plugged in, powering platforms like Robinhood, like FTX, Domain Money, some of these really interesting up and coming fintech companies. And so we're really focused on unlocking data sets to get it in the hands of those innovators so they can build the future of finance. Now, there is a very critical step in the process of unlocking this data that very closely involves AI and XBRL. So if we can flip to the next slide, I will dive in a bit deeper into that. So of all the data sets that we offer at Intrinio, fundamental data is probably the most popular. It's our bread and butter. And of course, it is a type of data that is filed in XBRL. So that is the source. That is exactly where we get the data from, directly from the SEC. We pull in all of the XBRL filings. And as I mentioned earlier, in 2009, this was mandated. And so all the 10Ks, all the 10Qs, the basis of what we need for fundamental data, we've got 15 plus years of XBRL data, right? So it's a great source of information for us. And we pull in all of that data because accessing and understanding a company's income, their expenses, their cash flows, metrics, ratios, that's critical public data that the public and investors and developers alike all need access to. And so that's what we're focused on with this product set. use cases, obviously, lots of fintechs are buying this data from us. They're displaying it inside of their apps for their end users, whether they're retail or professional traders that need to look at this data inside of an app. Also, a lot of internal analysis for different investment strategies, quant modeling, hedge funds, you name it. Lots of different use cases for this fundamental data. But there is one major challenge with accessing and delivering this XBRL data that we need to apply machine learning to. And I'm going to pass it over to Matt to tell you a little bit about how we do that.
Sure. Yeah. So although, we talk about the standardized data that companies will file their, an XBRL with the SEC, but there is just so many different ways from an accounting perspective, especially when you include both US GAAP and IFRS and how they change over time, that there can be, I think there is over like 75,000 different data tags that company accountants have classified that we've encountered in the real world. And, for an investor, that's just basically an impossible task, right? So what we do is we use machine learning to classify, as the slide has a couple examples, very simply, there is 3 different tags here that all basically mean the same thing, but different companies, use them in different ways. And sometimes you'll even see, one company might have operating revenue and then use revenue as a total. Another company might use revenue as just operating revenue. So pretty much, if you can imagine it, companies will do it and even invent their own tags. So what we do is we take machine learning models and take both the XBRL tags themselves and also their relationships to the other tags in the filing, and then use machine learning and other algorithmic techniques to classify them. So you can compare companies across themselves and to other companies over time, so you can make investment decisions. Okay, yeah, so kind of touched on this earlier, context matters a lot in classifying XBRL tags. Companies have a lot of, and accountants have a lot of variance. There might be good reasons for that. They might be trying to, make financials look better. Either way, we try to get to the truth of the matter of how companies are reflect their actual financial situations, try to prevent errors. Sometimes we even can tell pretty much right off the bat, like their accounting doesn't make sense, right? Their balance sheet literally doesn't add up, right? This revenue doesn't actually seem to be accounted for based on what they put, so we're in there, we're standardizing it, and then basically continuously learning. That's the thing. Companies are always evolving. US GAAP standards, IFRS standards, tags are always evolving. So definitely have to have a continuous feedback loop of retraining our machine learning models every quarter, or more frequently in some cases. And so that way our financials come in as soon as possible without any human intervention, or as little as possible. Cool. This is just, I think we can skip this slide, Michelle. We can, since we're running really close on time. Yeah, so this is just,
we can run a little bit over, Matt. It's okay.
Okay. Yeah, so just want to talk about, just a visual here for how we have so much, data, like you said, like the 75,000, tags, and boiling it down to simple tags, simple classifications, so our customers can do, the investment, make informed investment decisions. And this process, because we have the training, most of our filings come in without human intervention in a matter of minutes, from reporting with the SEC. So it's a really powerful tools for the financial community. This is a quick example of different companies. This is how they report. You can see Boeing has multiple revenue tags, even though this is like a pretty straightforward, income statement. They have through revenue tags. It looks like the second and third ones add up to the first one, right? There is different, names that they use for different things. Some are included, some are not. You can see Boeing has gross profit. Procter and Gamble doesn't. So this is just a very, very contrived example of how companies will report their income statement. And then if you go to the next slide, you can see how we've standardized it and put everything into their totals and remove double counting. And all of this was possible via machine learning. So, and again, so that our customers can get the data, quickly and make informed investment decisions as soon as possible, and typically within minutes of a filing.
Great, Matt, thank you so much. Yeah, unfortunately, I don't think we have a lot of time for discussion, but let me just ask one question, then we'll go on to CPE credit. Just one question that we did want to raise with the group is, the whole concept of artificial intelligence has been around for a really long time, but only now is it becoming a lot more widely accepted. Can I don't know, Tori or Rachel or Matt, if you can help us with, what are the kinds of pitfalls that AI encountered in the past, and how were those challenges overcome?
Yeah, this is Rachel. Happy to provide some quick perspective there. So there's two aspects to this, in my opinion. The first is, obviously, we've been talking about data, right? If you need to train AI and machine learning on data, and until standards like XBRL came around, until data became as open and democratized as it is, there was no data available. Really, there was not enough good data available to folks who wanted to apply machine learning and AI to whatever they're working on. The second piece is all the technology around it, right? I had an engineer who once said that machine learning has really reached its iPhone moment. Everybody can have an iPhone in their hand, which that didn't used to be the case, right? And so a lot of the open source tools out there that have hit the market have really opened up the accessibility of AI. But not having open source projects and open source tools, not having good data, those really, I think, are the two biggest things that prevented AI from moving quickly. But thankfully, we're making progress across all of those areas now.
That's great, thank you. And just one other question that we'll take for John. You talked about government agencies, and are government agencies, either at a federal or state level, actually using AI platforms today? What kinds of initiatives are they looking at?
Yeah, no, thanks. That's true. And just go to the SEC. We know that the SEC is using AI to review the structured data and unstructured data, and pulling out as much quality information as they can, and even identifying inconsistencies in the data sets. For instance, during the climate rules that came out, the SEC went out and looked at not just documents filed on the SEC's website around climate, but they looked at entities that were disclosing those documents on their websites. And they used artificial intelligence to pull in information that was coming in from those sources as well. So yeah, the proliferation of AI will only grow as the Financial Transparency Act gets implemented. And as Rachel and Matt and Tori keep honing, if we have high quality data, then AI and ML can really proliferate. And the Financial Transparency Act, as well as the implementation of the global standards for sustainability reporting, really set the table for best practices in delivering high quality data for the markets.
Great, thank you, John. I'm really sorry we don't have time for more discussion, but we need to go on to the poll questions. So I'm going to bring up our next poll, again, for those of you who are interested in getting CPE credit. So if you can, hopefully you can see this up here now. Which of the following are popular legal use cases for AI? Is it contract management and digitization, systematically uncover trends in insider transactions, or algorithmic trading models? Which one is most properly considered a legal use case? We've got about another 20 seconds or so on this. Okay, just about another 5 seconds, and we'll be shutting down this poll. And so the appropriate answer should have been contract management and digitization. So I'll shut that one down. And then we have our last poll question. The question is, which US government agencies require machine-readable XBRL data from the entities they regulate? Is it the Federal Energy Regulatory Commission, the Securities and Exchange Commission, and the Office of Management and Budget? Is it the Federal Deposit Insurance Corporation, Securities and Exchange Commission, and the Federal Energy Regulatory Commission? Or is it the Federal Energy Regulatory Commission and the Environmental Protection Agency? So just like another 30 seconds here. Okay, just like another 10 seconds. And apologies for our session running long. We just had a lot to cover, and I'm going to shut this poll down now. And the correct answer to this is the FDIC, the SEC, and the Federal Energy Regulatory Commission. So we'll shut that one down. So I want to thank our speakers for their presentation today. This is really interesting. Certainly I learned a lot. And just looking to get a comment in here from an individual. Just noting some commonly used AI and machine learning practices. So thank you for that. But thank you so much to Rachel Carpenter and Matt Von Lintel from Intrinio, which is one of our members. They came in as a startup and they're really doing phenomenally with their API business. And John Treslino with Donnelly Financial Solutions, also known as DFIN, and Tori Kim with eBrevia, a DFIN company. You guys are all working on some really interesting cutting edge stuff. And we're really excited to have you working with us as members or supporting us as members. And hopefully we can bring you all back again and revisit this topic in another 6 months or so, as I'm sure things will change. Thanks again.